Let's just look at the overall performance. And I mentioned that the Nairobi Stock Exchange overall gains for last week are up around 3.5%. One of the best performing bourses in Africa last week. It is expected to continue in this momentum because we're seeing a lot of foreign participation, Crispus. Are you optimistic about what we could see in the next couple of weeks?
Yes, I'm optimistic about the performance. I actually hope that it goes on. We've been seeing the banking sector as is about to release its first quarter results. So basically, we are optimistic that they'll give us good results on that.
Crispus, if we could just touch on some of the companies as well that gained significant ground. We had Mumias Sugar, I mentioned, up around 30% last week. A new CEO, a new financial director. Mumias Sugar under pressure slightly in yesterday's session, losing around 1.5%. But overall, it seems that investors are looking at this company and, of course, re-rating it, given the fact that we could actually see a new management style coming to the fore.
Yeah, the former CEO, the outgoing CEO has been at the helm for around 10 years now, I believe. And basically, I believe it's time for change. They've changed their top management. Of course, we'll expect to see a shift in strategy because as we know, CEOs have different leadership styles. From the rally, it looks like investors are optimistic that the incoming CEO will be able to add value. Of course, again, if you see how they've handled the handing over procedure, they've taken around 2 months, so that gives up for a smooth transition.
Let's delve into the banking sector. You alluded to it, Crispus, because we are expecting those first quarter results to come through. When it comes to some of the companies that you are looking out for as potential buys, Crispus, what is, of course, bringing to your attention from an appetite perspective on the banking front? It seems that there's just so many choices in Kenya. One has to be very careful in terms of which banks one would head into.
Yeah, I think we've seen a period of rising interest rates, intense competition. At this point in time, the banks that are going to be the winner, the banks that are going to post massive wins are those who have positioned themselves properly into the market. I mean, they've looked at their segments well, they've chosen their segments well, they're well capitalized. So in this case, I'll be looking at Diamond Trust Bank. It has a regional presence, so that means that they're able to make profits from each and every basket. They're well diversified, they position themselves well in the market. We look at NIC Bank, the ratios are still looking good for them. And of course, KCB and Equity. We've seen KCB always is turned himself into what I'd call a nimble giant. It's able to move properly and position, and take advantage of the market.
I mean, you mentioned KCB and Equity Bank. It seems that the foreigners are mostly excited about these two stocks because that's where we see the most foreign activity coming through. But some would also argue that they're looking slightly expensive relative to their peers.
Come again?
With regards to KCB and Equity Bank, we're seeing a lot of foreign activity in these two stocks. Some would argue that they're looking slightly expensive relative to their peers. Crispus, do you agree with this?
Yeah. I would agree with that. KCB and Equity, really their downside is a bit, I believe there is more upside than downside. So the first quarter results should also give them good results.
Let's also touch on Kenya Reinsurance, company out with results, and I mentioned those numbers a little earlier with regards to maintaining its dividend per share at 0.35 shillings. It's pretty much the same as what we saw in 2010. The stock sitting in positive territory yesterday. Also, the issuance of 1 bonus share for every 6 held. Crispus, is that a positive outcome in your mind?
For Kenya Re, it is a positive outcome, but if you ask me, I think the performance was flat because we have the top line growing, but then the operating expenses taking up much of it, and also the investment income taking a hit. Really, I think there's still much more room for growth. However, those prices, it's beautiful, though they need more capital to be able they need more capital to be able to operate.
Let's touch on Shamir of Kenya releasing their full year results as well. They announced the dividend. It's a pretty small company, but it seems that it's starting to get a bit of attention from the investor community. Are you looking at the stock as a potential investment?
Yeah, with a dividend per share of 20 cents and at a price of 6 shillings or thereabouts, that gives us a good ratio of price to earnings. And then again, basically the ratios will look good for them. I love the dividend. The dividend yield is actually beautiful for me.
On the fixed income space as well, Crispus, and I look at what the shilling is doing right now, it's pretty much stable against the US dollar, and it's pretty much also being reflected in what we see with regards to fixed income and some of the yields that are emanating from that space. Are you optimistic that we could actually see the stabilization going forward?
Yeah, because I expect the shilling to remain at those levels. The economy is doing well at the moment. We have the rains. Inflation figures, expect them to remain relatively flat, 100% plus or minus basis point. So really, I expect the trend to continue to be flat as it is.